Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Looking at natural gas starting on the hourly. So whipsaw is back and we've got our big dump from the lower high on the daily. Oversold bounce, the RSI dipping just below 30. Big move, higher low, higher high, real big move. But we ended with a bearish reversal candlestick on the hourly. Closed down near the low of this candlestick, bearish reversal inverted hammer with a lot of profit taking. So where does this leave us on this daily time frame? Reaching an equilibrium, dump, high of the bounce, higher low, lower high, higher low, getting tighter and tighter. And next week, we are going to see a clear break, most likely, of this pattern. The range right now is 3245 support and 3494 resistance. And whichever direction we break is going to indicate where we head in the midterm, I would say, for the start of February. That would be a really nice indication for what February is going to hold. Checking it on different time frames on the weekly, you can see it's just a lot of chop, red, green, red, green. Bulls need to see a break of that 3494 level to try and confirm this bullish reversal candlestick on the weekly, as we could not confirm the bullish reversal candlestick 2 weeks ago. Looking at the 4-hour chart, a little bit of a different picture, and I don't like it as much as the 1 hour, or the daily, I should say. The daily chart, by far, the clearest picture of what's going on in natural gas over the past month. And that is definitely what I would be watching. And if you look at the past 2 days, and if you put those two candlesticks together, pretty much one big doji of indecision, with a big upper wick and a big lower wick, and a tightening range still forming. Looking at UNG on the daily time frame. So UNG, we did get a higher low and a higher high. And the reason for the discrepancy in the last video I made, where we had that higher high here on natural gas and not, or I should say in UNG and not in natural gas, was due to the MLK Day holiday. There was a bit where the commodities continued trading, but the market was closed, so UNG was not trading. So definite discrepancy there. But we do have a little higher low, higher high pattern. As long as the bulls hold this low of 801, they'll maintain that higher low pattern. And the 200-day moving average support is now at 805. Bullish MACD cross underway, but it's all about that daily chart on natural gas. Again, everything that I'd be looking at on anything to do with natural gas is going to be all about that daily tightening range, because once it breaks, we should get some clear conviction in a clear direction for February. So if we don't break it by the end of the day, Wednesday, we'll be watching the inventory report, and it will be a very important inventory report, because that will give us the indication that we're waiting for. So not a whole lot more than that. Looking like the bears are going to step back in just because we had that end of the hourly candlestick showing weakness. And we'll be watching to form a higher low on that pullback compared to 3245. There's our 3245 support. You can draw an uptrend line here as well, just some visual, but I'd be going off the price action. But maybe we'll form that higher low somewhere around that level, which would be in the upper 320s. So we'll check back in on Monday to see this range likely continue to tighten. I hope you have a great weekend.